full tilt towards equities, expiry day. Let's get in an important voice. VK Sharma, Head of Business, Private Broking and Wealth Management at HDFC Securities, joins us on the show as well. VK, good to have you. Thanks so much for joining in. Neeraj here. Good morning. VK,
good morning.
A sense that we got after market hours yesterday, talking to a few people, is that if a lot of FIIs who will probably not roll over their futures hedge positions this expiry, and if that doesn't happen, then there could be some significant amount of cash market selling as well that could happen today, which will keep the market subdued. You think that's a possibility?
Although this is a possibility in theory, if the FIs are not happy with the kind of guidelines they are getting and they are not comfortable with the kind of questions that the taxmen are going to ask and even going to question their simple decisions, whatever they have taken in the past. From that perspective, I think it's a logical thing that the further volumes could in fact, they may not carry it over and they will dwindle, which will result into some kind of a selling in the cash market as well. But we must remember that yesterday was a day on which the markets had it was the last day for the markets for anybody to sell whatever it wanted to sell in the financial year, and that plays a greater part in our system. So I think all those people who have sold due to compulsion, they would be willing to buy the equity at a low rates in the coming week. And beginning today, I think it's a new settlement for them in the sense that whatever they buy now will go into the new financial year. So this will partly offset whatever the FIs may have to sell. But nevertheless, if the FIs do press the gas on the downside, I think the domestic market as well as the retail investor may not be able to absorb it without a crash in the market. So you could see some kind of a actual Nifty going down to levels of even below 5,000.
If I'm not wrong, I heard you mention that there's a possibility that we may see the markets drifting down to as low as 5,000. You think that happens over the next 2 or 3 sessions itself? And if so, what drags the index downwards? I mean, would it be banking, which will essentially be in the weakest spot the last couple of days, or could some of the defensives participate as well?
Okay. First, let me comment on your original question. Your original question was that should the FIs in fact sell? Obviously, it is going to result, if the FIs is going to sell, the domestic institutions are not in a position to absorb that, and neither is the retail investors. So therefore, you could see the Nifty going to sub 5,000 levels. What could be leading that? The one to lead would be the one which has led the markets up, and that is the banking sector. It is a crowded place right now. It is a crowded trade, and also from the perspective that the borrowing program of the government is much healthier than what it was thought about earlier, and also that has resulted into the yields rising further. From that perspective, I think the ability of the markets to continue to hold on to their long positions in the banking sector will be under question mark, especially if the interest rates, if the interest rates are going to come down only in the month of June and not April, then I think people are going to lose money here, and banking sector is the one which could essentially make the markets go down.
Okay. VK, what are the trades that, I mean, we'll come to specifics as well, but broadly, with the kind of gap down that we are staring at, maybe 1% or thereabouts, what is your sense of what does one do post 920, 925 and post the market opening gap down?
I think we have to remember a few things, and those things they've been learnt over the past of many months of derivative settlement. First thing is, what happens today is going to be a logical culmination of events and positions which have been built over the current series. So the way that the markets close tomorrow, there's no guarantee it will open tomorrow. The way the markets close today, it's no guarantee how that they will open in the same direction. If the markets were to go down, they could open tomorrow higher also. So it is all a function of, so do not read, I for one, we advise our traders to be on the lighter side, not to dabble too much on a settlement day, and ignore the either in first morning or first thing if the market sells off, ignore that, and you look at the markets only if it sustains after the first half an hour. If the weakness continues, then only you look at that. So I would be I'll be looking at this because I believe that for retail investors, March is an important event, and I think the weakness pertaining to that has almost ended yesterday. So I wouldn't be pressing too hard to press this short sales. I'll be looking at where the market closes and look for building positions or going short tomorrow, not today.
What is it that you're recommending from a medium to a long-term buy or a sell idea? Any mid-caps that you're liking or disliking?
I think one has to remain invested in terms of the large caps, and in the large caps as a contrarian buy, Kane India is obviously a good buy, but on a day when crude has tumbled, I think Kane could open further lower, but we would be willing to stick a neck out and go out and buy Kane, because it is a hedge against any rising currency or rising crude in the longer run. In terms of mid cap, especially if you were to look at, there are good stories, but they need to be bought. They need not be bought aggressively. They need to be bought with a lot of conviction to hold for at least 8 months to 1 year, and you have to average out your buying. So Gandhimati Appliances is one such stock which is in the domestic appliances space, and which quotes at around maybe 370, 380. This needs to be bought anywhere between 340 to 370 gradually. And because of the people are now getting into it, large investors have come in, and you could it is available at a market cap to sales of 50% of what competition is quoting at. So this is one stock which we like. Another stock we like to look at is whenever the selling part is over in Bharat Earth Mover, we'll like to look at that. So this is a stock which was recommended earlier, but will be on the sidelines and look at where the selling stops. We'll be wanting to look at this particular stock after the whatever the rumors are on the bribery front die down.
Good having you, VK. Thanks so much. Look forward to having you more often.